BBIG is looking like it's setting up for a very nice breakout. Let's go ahead and review now. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a BBIG technicals and raw price action thread of analysis on this fine Monday night. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's go ahead and dive right into the charts. Okay, so we're looking at BBIG on the 3-day chart here, and as you can see, we have been riding a massive descending channel. Usually descending channels give us the signal of a potential reversal incoming. Okay, so now please be aware that this channel has been ridden since September 2nd, 2021. Okay, so it's a large scale. Okay, so now what the numbers that you're looking at right up here are actually tests of the resistance. Okay, so we have 1, 2, 3, 4 tests of the resistance. Usually number 4 tends to be that actual breakout test. Okay, now it's not to say that number 5 is not a breakout test. I'm actually saying that 4 is the more common one, okay? But 5 also happens to be a bullish test of the resistance followed by a continuation to the upside, okay? So now I know that sometimes BBIG tends to work against the broader markets, or it has an inverse correlation, and in this case we can go ahead and just verify to see how it's moving against the broader markets. And as you can see, the price action is following somewhat of that market trend. Okay, so it looks to be a little dependent on it. Okay, so if we are going to face some some weakness in the markets, then BBIG may actually see some of that. Okay, but in the candle structure, I'm talking about just this the candles here going from, let me block out the view on that SPY. If you can see, the candles are going from small to getting larger, right? That's a typical formation, and it's usually shorts covering and also a type of squeeze in a very small way. Okay, it has moved substantially to the upside, and it is in relation to trying to break out on that test number 5. So let's go ahead and now move on to the next chart, as I do have plenty to cover here. Okay, all right, so now please focus in on this broadening descending wedge, okay, this formation right here. So, and actually on the 3-day, you can see it right over here, okay? So we're just going to zoom into this area here and see what's happening, okay? Because this is a bullish formation, and it also presents a reversal as well. Okay, so in this case, we are following the golden rule of 3, which is very particular to this formation. Okay, so what that means is that we have test number 1, 2, and 3 of the resistance, followed by a large capitulation event, and then the upside in an attempt to actually try to break out on that true test number 4. Okay, so now I know we're talking about formations and shapes right here. Everything is like silly, right? But I did take a Fibonacci retracement from the prior day's candle high to the swing low. And as you can see here, we actually found resistance and closed right below the 4.618. So we are following a geometrical format here. So this is good. Okay, so now let's go ahead and just pull up some moving averages, okay? So we can see that on the simple moving averages, we have now converted the 50-day simple moving average as a form of support, okay? So now we are very close to it, which usually means that we can actually fail the support temporarily before actually succeeding it one more time. We do have the SMA 10, the 10-day simple moving average, serving now as that guide towards the upside, okay? So this is very good. It's using it as a very important area of support. Now let's load up the EMAs, 7 and 30 period, and we can see that now the 30-day exponential moving average is now a form of support as well. Okay, so very good stuff right here. So now what I want to touch on is the basic rules of how to trade a broadening descending wedge. Okay, so usually when trading a broadening descending wedge, we have a target or a price objective. Okay, so per the playbook rules, the price objective of how to trade this is usually located at, let's see, at about 88.24. Okay, so that's about the area where take profits can happen and a heavy resistance can be found. And as you can see here, test number 2 is very much in direct correlation with that take profit zone. Okay, so now we can go ahead and take a fib from the entire swing high to the swing low of the current candle. Okay, so the one that we just printed last in the last trading session. Okay, so you can actually see that the 1.618 is just under that the price objective of the broadening descending wedge. So now what we can do is actually take a range from the 1.618 to that box. Okay, so I'm sorry, to the top of the formation price objective of about 88 cents. So now we do have this area of resistance. Okay, so we are looking at 82.46 to about 88.24 as a very important area for take profit. Okay, so I'm just talking about the trading it in a short term, right? So usually what happens after finding the breakout out of the broadening descending wedge is that we actually have to, let me take into account where we are after market hours. So 69.47 is where we're falling. Okay, so 69.47 is just about yeah, let me just make sure I'm not dyslexic over here. 64.97, sorry. 64.97 is where we stopped. So that we're using right now the 3.618 as a form of support. But hold on just a sec. So 64.97, we're just going to go ahead and draw it right over here so that we know where we are. Okay, I know that's it's not exactly it, but it's fine. It's close enough. Okay, so now on the 12-hour, of course, you can see that downside move already starting to happen, okay? But we're trading it on the daily here. So we are sitting right about here in the price action. Usually what tends to happen is that we need to retrace to come back and test our newly converted resistance into support before a continuation to the upside. Okay, so we can see that in the next day, we also have a range of support, okay? And that is going to be located between the 2.618 and the 2.272, between 60.44 and 59.08. So this is very much an accumulation area that can be used before a continuation to the upside. Okay, so I'm giving this to you very discretionarily. Okay, so at this point, I'm just giving it to you the way we usually trade this formation. Okay, as though we were looking at the play. All right, so now we can absolutely see a continuation to the downside based on just the candle structure here and the breakout point out of this formation. We can see the downside coming in to about 60 cents before confirming or validating our newly converted resistance into support, and then we can make that upside trajectory. Okay, by the time that we do reach that lower point of 60 cents around here of 60, let's see, yeah, between 59.08 and 60.44, we can actually then use the 30-day exponential moving average as that form of support, as it will land in direct correlation or confluence with the 2.272. Okay, this is very important for us to notice in the play. Okay, just in case you are curious. Let's go ahead and now move on to the next chart and see what we have. So this is now, what you're looking at here is volatility represented by this indicator BBWP, and this is momentum. Okay, so stochastic momentum, which is proprietary to TradingView software, which, by the way, I am an accepted affiliate now for the TradingView team. And if you do if you do decide to, open up an account with TradingView so you can maybe trade alongside me as we chart these every night, then, it would actually greatly help my future of trading. Okay, the link is in the description below. So please do notice that the volatility has now entered the critical volatility zone, which is within the 90 percentile. Okay, and while we're doing so, the momentum oscillator is actually starting to pivot towards the downside, which is very much in confluence. And this is 4-hour chart. Okay, so this is pretty much short term. So it is suggesting a short term pullback, which is absolutely in accordance with this pullback that I'm talking about. Okay, so now that we know that from stochastic momentum versus volatility, we can go ahead and now move on. Okay, so particular to this run up here that we had on, let's see, August 2022, you can see that we reached that critical volatility zone, and when we finally maxed out and started the contraction phase towards the downside, you can see that alongside the contraction phase, price action started going towards the downside, and you can see literally like this. Okay, so that's very similar to what's happening right now, except this is a very short-lived downside. Okay, we still have to come back and confirm our newly converted resistance into support. Let's go ahead and move on to the last part of the analysis, and this is going to be the RSI. Okay, so what we're looking at here is divergence. Divergence is the opposition of price action versus momentum. Okay, so in this case, momentum represented by RSI, the relative strength index, and these blue lines that I actually drew by hand are signaling, or they signify drives of hidden bearish divergence. Okay, so that usually happens when momentum is making a series of higher highs, just like it is on this diagram, and price action is making a series of lower highs. Okay, so that, as you can see, like that. Okay, so we have several drives of these being phantom drives that usually mean that they're having the cross price action to get from point A to point B. As you can see, all this price action here being crossed. Okay, so this is signaling a downside as well, and it is already in progress. So and now, judging just by the pivot on the 12-hour RSI signal line, which is the purple one, it's not so substantial, and it looks like it's actually very temporary. Okay, so there are when we do reach this this zone right down here, which is approximately where I would expect for this to find some type of support before a continuation to the upside. Why? Is because when we reach the okay, let me just pull up this drive here, this the diagram here, so you know what I'm talking about. Okay, so every single line in between these zones, these four zones are actually these four zones right over here. Every single line in between, if you count 2% up or 2% down, that would be the gravitational zone of every zone. Okay, so what that usually means is that it can be used as a form of support before as a pressure or a gravitational pull into the following or prior zone, and inversely affected as such. Okay, so in this case, I can see that we can potentially make a downside move here, and then finding that gravitational pull, and then literally coming right back up to the bull strength percentile. Okay, I will be talking about these percentiles very often, so this is up here for you to take a gander at. Okay, so now let's go ahead and open up a multi-pane to finish off this analysis. Okay, so yeah, we're just like always, we're gonna go ahead and start off with a 30-minute immediate short-term time frame, and as you can see here, we are now coming right back to test that 14-day simple moving average as a form of a valid support. Okay, so this is very likely to live out pretty fast. It's looking slightly bullish, but I do not like it when it's such a little pivot like this. These little pivots usually tend to fail. As you can see right here, it just failed like that. Okay, so these little pivots are not that credible. Okay, so this is likely to continue just slightly to the downside. Now let's look at the bi-hourly. So, the 4-hour. But if you are curious to know what time frame I'm saying, other than the fact that I'm going to say it out loud, you can look right up here. Okay, so as you can see, when I click on this one, it's the 30-minute immediate short term. This is the 4-hour. This is the 8-hour. Sorry. So yeah, and so on and so on. Okay, so now the 4-hour RSI is suggesting a continuation to the downside. Okay, so but however, we're still well within the grips of the bull strength percentile. So this is still looking pretty good. We can just see, a shorter term pullback before a continuation to the upside. Still, a 4-hour is still able to live out kind of fast, definitely within a day. Okay, now the 8-hour time frame is suggesting a continuation to the upside, and as you can see, we're in that gravitational zone of the bull strength percentile. This is likely to have us gravitate right into the following zone, which would be the overbought percentile. Okay, so this is looking very good. Aggressive upside, and the 14-day moving average is pivoted towards the upside as well. Please take a look at the daily time frame, as it is absolutely in bull strength as well. Okay, so I know that we're in this gravitational zone, which can present a slight pullback, but given the slope, given the degree of this of the RSI signal, I don't think that's the case. I think this is literally going to continue to the upside after a short-term pullback. Okay, so now the 3-day is also very much aggressive to the upside, and has now reached that gravitational zone of the bear weakness percentile, which means that gravity pull right into the bull weakness percentile. So looking very bullish thus far. Okay, it's 5-day, also aggressive to the upside. Yes, it is in that that gravitational zone, and it can actually pull us back down to the bear strength percentile. But please do notice that we have this 14-day moving average now below us, freshly crossed, okay, which means that upon a continuation to the upside, if we do face a downside continuation temporary, we can actually use the gravitational zone from the bear strength as a support, as well as the 14-day simple moving average before a continuation to the upside. But this is a 5-day, so this is likely to take weeks. So what I'm basically saying is that yes, everything is pretty much in accordance of what I'm speaking of here. Immediate short-term retracement down to the 5908 to 6044 area, potentially by the mid-session tomorrow, or actually the end of the session, followed by a correction to the upside and a continuation as such for a multi-day upside, okay? But also, please remember that I am looking at the SPY as well, and it looks like there could be some type of sympathy to the SPY, okay? So we have to keep an eye on the broader markets as well. All right, you guys, so please know I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. I need you to do your own DD, and everything will be just fine. Okay, you guys, I am here to help. I know that I haven't covered BBIG in a long time, and this is actually where I started everything and where I wish to have continued. But as you know, some of you already know, I'm not going to say this out loud, okay? So, yeah, you guys, everything is looking awesome for BBIG. And if you do want to get in contact with me, please refer to the links in the description below, as that's where you're going to find the Discord and the Twitter, okay? So I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.